Hello, I'm Alistair and welcome to the Toolkit for Traders YouTube channel, where we give you the tools for trading success. On to today's video. Hello and welcome to another Toolkit for Traders YouTube video. We're carrying our series of Zorro trading videos where I show you a tool that is little known in the trading world for professionally backtesting your trading strategies, coming up with new ones. Last week we covered how to do the code itself. It's written in CLite, so I'll give you a bit of a primer. Check that out if you're not sure what's happening here, because I gave that video so that I wouldn't have to do as much explaining in today's video. So in today's video we are going to cover off a trend trading strategy. I'm going to show you how to write a trend trading strategy in Zorro, and what that can do and how we can test it. And you can see here with the trend trading strategy that I'm going to show you, it gives you an annual return of 8.2% and an average of 3.2 pips. So not brilliant results, but it's a very, very simple strategy which you can build from there. And I'll show you how to write that, and then you can take that strategy, you can download the code, and you can trade the indicators for the ones I've used here, find better ones, and all that kind of good stuff, and come up with your own strategy and test out your own. But very, very simple at this stage. But yeah, 8.2%, not bad if that was just you starting out. So we'll go straight into it. In fact, actually, we won't go straight into it. There is something I just want to show you. We are so close now to on the channel to 2,500 subscribers. So it'd be amazing for me to hit that. It would be really, really encouraging. So thank you to everyone who subscribed so far. Thank you for the positive comments we've had. And if you don't mind just pausing the video, subscribing now, help me get to 2,500. That would be amazing for 2022. Okay, though. So if you go into your Zorro, open up your Zorro script, and you go to new script here, you will get a new Zorro file that looks like this. And this is a strategy template, very similar to what we've been using so far, what we've been writing ourselves. And I'll talk you through a bit about what we're doing here. And we'll start writing our trend trading strategy. So the first thing I'm going to do is I'm going to click File, I'm going to click Save As, and I'm going to save this as coding lesson 5. You can call it what you want. You can call it trend trading. You can call it super trend, whatever you want to call it. You call it that, just as long as you call it something unique. So you've got a copy of it. You don't overwrite the last thing you were doing. We're just going to call this trend trading, and we're going to use a LowPass filter on this one, which I'll explain in a moment. So we have this function which we've defined, and this is a run function, and this is called every time a new bar is generated in Zorro, and that bar period is set by the number of minutes you set here. So bar period we set as 60 minutes. So every 60 minutes this function will get run. You can see here we've got the asset function, which is telling the system to use the Euro USD, and we've also got this set log file, which what that will do is it will record all the trades that the system takes into a log file, so that you can analyze them later in depth in case there's any errors or anything that doesn't quite look right. We're also going to set something here called plot now, and what that will do is as soon as the simulation has finished running, it's going to load up the chart with the equity curve straight away, so I don't have to click any extra buttons for that. That's all that does. Log file prints everything out into a text file that you can analyze. So we go to our bar period, and we've got this set as 60. Now you don't have to set this at all. If you go to Zorro, you can set it in this period function. If you set it using this, it will be hardwired. So what we can do is we can just take that out for now, because we can use this bar period, and we can go up or down to whatever we might want with the slider. So that's nice and easy for us. Okay, we're going to have what we're going to do now is we'll go down to the sort of meat and bones of the strategy. So it already has this vars, so a series of prices, and you can see here it's using price. We're actually going to define price as the close price. So we use the close price function, and it will collect all those prices, the close prices, into this prices variable here, and we'll use that for analysis. We'll then create another vars, and we're going to have our trend indicator, and we're going to name it trend indicator, and we're going to create another series, and this one's going to be an analysis of the prices one. So we're going to use something called a low pass filter. It's something I spoke about in one of my videos, where I showed you the best types of moving averages. Low pass filter was one of the alternatives to simple moving average, or indeed an exponential moving average. In fact, it may well be better. You'll have to watch the video. Go find that video if you've not seen it before. Really informative. I show you a direct comparison between all the different moving averages and similar indicators that you can have, and some of them are much faster than the classic ones you're shown on baby pips. So we've got a trend indicator. We've set it as series. So what it's doing is it's saying we're going to do a low pass filter on the data, which is prices, and we're going to use 300 as our period. So quite a large period there. So it's going to have a lot of data in there, but it's also going to have a lot of lag. So that's something to bear in mind with a large period. Now, because we need 300 pieces of information going into this, we have to tell Zorro something else. So we need to tell it also that we need, before it starts trading, it needs to have a look back period of at least 300. And that's because the length of this indicator is 300 into the past. It needs 300 data points in the past. So we need to tell Zorro that we need 300 data points in the past before we begin. So that means that it will go even further back into time than the initial start date. Speaking of which, we can now set here, we're going to set our start date. So we're going to do a really long test here. Start date, we're going to go all the way back to, let's go back to 2011. And we'll go to January the 1st. So you got the set by year here, month, and then the date. And we will also have the end date, and we'll do the end date at the end of 2021. So we've got sort of 10 years worth of data there or thereabouts. So two simple variables we're going to set here that are inbuilt into Zorro. We tell it that we want the simulation to run from there and until there. Obviously you wouldn't use these in trading, but these are just for simulation purposes. Excuse me, I'm just going to take a drink. Okay, so we've set the start date, the end date. With the look back period is going to go 300 data points behind here before it starts. We're on the Euro USD and we're almost ready to go. What we can do here is a good practice here is we click save on coding lesson 5, and we could run it, but it's not going to show us very much. But what we can do here is we can use the plot function, and we can say we want to plot, we're going to call it low pass because that's the name of the indicator. And what we're going to do is we want to plot the low pass line on the chart, and we're going to do it in red. So we've used this plot function here. We've given it the data. We want a line instead of dots or triangles or stars or whatever, and we want the color to be red. Now, if you don't know this function, you can highlight the plot and you press F1, and it will bring up the help, and it will tell you. So it's looking for the name, the values, the type, and the color, and you can see here the different types. You've got dots here, lines, that kind of thing. All these different things you can do with Zorro. Shows you all the different variables you can put here, the different colors, all that good stuff there. And you can look at by pressing F1 when you highlight. So we just click save here. We'll get our Zorro back up, and I've just pressed the wrong button. So Unity is going to come up in a moment, which you'll have to excuse me. That's annoying. But in any case, we'll go to our coding lesson 5, and just ignore that there for a moment, and we'll click test on our code in lesson 5, and it's going to compile, and you can see it's done nothing yet, and we click it's not responding. Hello, there we go. So you can see now it has finally loaded up, and we've got a price chart going from 2011 to 2021, the end of, and you can see this red line, and because we're quite zoomed out here, we've got 10 years of data, you can just see the red. But if you zoom in, you should be able to see how the low pass filter works. You can see here the low pass filter, how it hugs the line, and does that. Now that actually looks quite that looks very sharp to me. We've done prices, that's why. What I should have put in here is trend indicator, excuse me. So what I like to do with my videos is, I'm doing this live. I'm not doing loads of editing because sometimes a polished feel with videos can give you the impression that people are perfect and these things are perfect, but real coding, you make these kind of mistakes. So there you go, there's one of mine. So I've done the wrong one, and you can see now the low pass filter is in the red, and that's, you can see how it's lags price by some way, but also it's really nice and smooth, and we can use that smoothness to indicate a trend and the turning points here without getting too many false signals. So the turning points are a pretty good measure of when price is going up. So you can see here price turns to go up here, and turns to go up here, and these were pretty good indicators of some trends. So we could use this signal here as a way to get in and out of our trades here. So we're going to go back here now. We've got our we're pretty confident we've got our low pass filters working correctly. We can start to use this as a signal. So we're going to use a really simple signal that that Zorro has inbuilt, and it's called the valley function. And what the valley function is looking for is a valley. It's a V shape in the price curve, so it's where price is higher, then lower, then higher, and that's a valley, a V shape, and that's an indicator that price is turning and going upwards. So if we have a valley in the trend indicator, then we want to do something, and what we're going to do is we're going to enter long, and we're not going to tell it any size or anything like that, because at this point we just want to know if the system works. We don't want to mess around with risk management or anything like that. We just want to know if it works, and vice versa. If we have a valley is a signal to go long, then a peak would be a signal to go short. So a peak being like the top of a mountain, where you have a lower price, then a higher price, then another lower price. Zorro has that inbuilt, so you don't have to do like you if you were in MQL4 or MQL5, you would have to send it the data from the current, the last, and the last before last, and bars, and work all that out. You don't have to do that with this function. So what you can do here is, and we've just told it to enter long on a valley, enter short on a peak, and we run that again. So that took us a couple of seconds, and we've got now trading signals. So you can see it's taken trades this time, and if we zoom out, you can actually see that it wasn't that good. So if you look closer at the chart, you can see where some of these valleys were giving us signals to go long, go short, but they were happening quite close together, and it was because the chart was changing over, and that resulted in a lot of bad signals. You can see where the trend was really strong. You can see that equity curve here, which is in the background, was really strong. If you can take the equity curve out here by pressing that, but you can see if I take the trades out and the candles, you can see how the equity curve, which is this blue line, went really well in this period of strong trends, but really struggled when we had this sideways period. You can see the equity curve dipped, and it's been pretty steady since. So we need to think of a way that we can make this better. So one of the ways we're going to make it better is we're going to add in a filter. And the filter that we are going to use is one called MMI, and it's inbuilt into Zorro. So again, you may not have heard of LowPass, you may not have heard of MMI, but we're going to use those two functions to do our filter with. MMI is based on how random the series is, how random the price is, and if the price is acting very randomly, then there's not a lot of money to be made in it. If the price is acting non-randomly, then there's potential inefficiency in the market which we can take advantage of. So we use the MMI function, and we'll put in the datas from price, and we put in a 300 time period as well that we used for the low pass. And again, if you press MMI and F1, it takes you to all the technical indicators that are available on Zorro. And if you go down to MMI, which is here, Market Meaness Index, and it's a one that's you'll only see in Zorro probably, unless somebody's ported it to others, but it's one that's actually been developed by the people who wrote Zorro and have their own blog on the Financial Hacker, which I highly recommend. And it's based on statistical analysis of what is random and what is not random. So it's a really, really solid indicator. It's not going to tell you to go long or short. It's just going to tell you whether price is being very random and hard to predict, or whether it's being easy to predict. So we have our raw data of MMI, but it's quite jumpy when you see this. So what we're going to do is we're going to smooth it out in the same way we've smoothed out our prices with a low pass filter. So we're going to do MMI underscore smooth as another series, and we'll call that there, and we'll do another low pass filter, but this time we'll use our MMI raw data as the data for it, and we'll use 300 again. So we're going to smooth out that data excuse me, as well. And then what we want to do is we're going to plot that underneath so that we can see it. It's a bit like an oscillator, like the RSI, if you've ever seen it like that. We're going to call this MMI raw, and we'll use our MMI raw data, and we'll give this this will be line, and it's going to be new, and we're going to give it the color gray. And the reason I put in the word new there is I want it to be on a new chart, so I don't want it to be on the price chart. It wouldn't look right at all. I want it to be on the chart underneath, on like an oscillator. So I give it the phrase new, and it will create a new chart and it'll plot it on there. I then want to plot the smoothed out one. So MMI, excuse me, in a string, MMI smooth. And we're going to put in the MMI smooth data. And we're going to give this a line, and this is going to be, let's give this the color blue. Why not? And we'll click that, we'll click save, and we'll go back to our Zorro, and we'll click test again. And I've got a syntax error. MMI smooth equals series, MMI smooth. So I've got a syntax error here. Let's have a look. What have I done wrong? Live coding, so syntax error, line 16. What have I done here? One open bracket, two open brackets, two closed brackets, and a semicolon. And vars smooth equals series low pass MMI rows. There we go. Here's the closed bracket. So that's coding for you. You sometimes miss those things. Press that again, and it is running. We've not changed any of the trading logic, so it's going to be exactly the same in terms of the result, which is not good. But what you can see is we've got this new chart at the bottom here, and you can also see that we've got the MMI data here, and you can see this works between 0 and 100, and when it's going up, when this blue line is going up and when this grey line here is going up, that means the data is becoming more random. So 75 would be totally random data. You would not be able to make any money in that field because the data is totally random. So you can statistically analyze price data, and you can see there is inefficiency in there because it is not random. It is almost never random. You can see it's never above 60 here. So statistically, price data is not random. So when people say these markets are totally efficient and unbeatable, then it's not true. Statistically, there is inefficiency in here. There is non-randomness, which you can take advantage of. You can see also the blue line, which is the low pass filter applied to here, and you can see again that smooths out the data, and when it's rising we are getting more random, and when it's falling we're getting less random. So what we're going to use that, and we're only going to trade in situations that are becoming more favorable to us. So by that I mean that the randomness is coming out of the market, and we are coming into a time when there's more inefficiency in the market. So we're going to use this an if statement, and we're only going to trade when the MMI smooth is falling. So you can see here when it's falling we would enter a trade, when it's falling we would enter a trade, but if it's rising and it's becoming more random, then we think that might be a false signal and we're not getting in. So this is very different to ordinary oscillators that you might have seen that are trying to tell you if the price is towards the top of its range or something like that, which is what the RSI will do. The MMI is telling you, is the market behaving more or less randomly, which I think is a good way to tell you if the market is favorable to particularly trend trading. It needs to be non-random because trend trading ultimately is an inefficiency in that when the market is going up, we believe it's going to continue going up more often than it's going to reverse, and vice versa. And that is because humans are operating in the market, or algorithms that humans have made. So there is inefficiency there. If it was totally random, we couldn't make any money, and we would constantly get false breakouts, that kind of thing. So we're going to then go to our chart here, and we're going to test it out, and we'll see if we get a better result. So you can see now we do have a better result, like a significantly better result. If you remember before, we were in the minus through the whole testing period, and this is telling us that we would have an average annual percent increase of 11.7% and an average trade win of 4.5 pips. So that's very, very small, but it's promising that we've got an 11% annual increase, potentially something that we can work on here with the introduction of that filter. And if I zoom out onto the chart overall, and I'm just gonna get rid of the candles, the black line. You can see the equity curve actually between, I'd say, 2012 and 2015. The market was very favorable to this kind of algorithm, very trendy, lots of big trends here that obviously the algorithm was able to take advantage of. And you can see that by, if I just zoom in here, you can see all these big green lines, which are the profitable trades, massive great trades here, which really took advantage of. But, and here's the but, it really struggled during this flat period. Lots of turns in the market, really knocked out the equity, and then hasn't really, for the last 5 years, this has not been a particularly good system. Maybe slightly upwards, but really it's just been a bit of a sideways. So it had its heyday at the start of the last decade, but has really struggled in the second half. So, and that just goes to show you that sometimes you think you're onto a massive winner with an algorithm, and then it is just not going to work. So that's using the MMI as a filter. You can see that's a much better result with a single filter than not. One thing you might be asking is, well, you know, you're entering the trade and exiting the trade just on the turn of this signal. Really, you should never trade without a stop loss. So you really need to put that in. So I'm going to show you what a stop loss will do to this result. So you've seen here we have 11.7 as our result, and we're going to add in a stop loss. And actually in Zorro, because all things are very simple, it's so easy to add a stop loss in. So we're going to say our stop, and I'm going to set this stop at way past our way away from our price, because actually I don't want to be stopped out, because a stop is a definite loss, and I'm just going to set a very distant stop, and that's just purely as protection, right? Is if the market goes really crazy, I want to get out. I don't want to be in there, but actually I don't really want the stop loss to be the reason I get out of trades. I want to get out of trades because of a technical reason, not because a stop loss is getting me out. And I just want to show you what that will do to your back test. So let me click test again. It's running through the same thing, and you see we've significantly dropped. I say significantly, it's about a 25% off. We're at 8.8% annual increase, and we've dropped our average trade win by a pip. And you can see, that the chart doesn't look much different, but the result is different in terms of how that went. And you will find that wherever you put stop losses, obviously they increase your losses, and the closer they are to where you enter the trade, the more often they will stop you out, the worse they will make your trading system. So I think there's a lot said about stop losses. People love them. People love a tight stop loss. But with algorithmic trading, if you trust the way you built your system, you shouldn't need to put stop losses, because you're not relying on emotion. You're not relying on your own intervention. The system will get you out when it's time to get you out. Will get you in when it's time to get you in. If you built a system sufficiently robust and you trust it, you may well not want to get into that. But if you feel better with it, by all means put it in. But it's going to cost you about 3% in the case of this system. So one last thing I just want to show you on this trading, with this trading system, is I just want to show you a bit what you can do to analyze your trades, because it's all good and well to show you, hey look, I've got some good trades, I've got some bad trades, but you may want to look at a bit more than that. So one thing you can do with Zorro is, if I go here, I'm just going to go down to where we put those plot functions in. And what I'm going to do is I'm going to just get rid of those for a moment. And I say get rid of, I'm going to comment them out and save them for later. And what I want to do here is I want to use a different plot function. And this plot function is called plot trade profile. And I'm going to set this as the last -50. And if you want to know what that means, we can highlight it and press F1. And we plot the trade profile. So it's going to generate a profit distribution like the one you can see here of the test run. And it shows the frequency of trades dependent on their profit. So how profitable they were and how many were profitable to that level. And you set the number of bars. If you set the bars as to be less than 0, it's going to set how many pips per bar, so like a 50 pip width, because what it's going to do is, like a histogram, it's going to collect all those into a bucket, all the results into a bucket, and show you that in a histogram form. The plot profile, I'll show you how to do that so you can get that histogram. What you're going to do is you're going to go plot trade profile, and you put in -50 because we want it in 50 pip buckets. But here actually this function won't work on its own. If I go to Zorro and click test now, I click save first, and I click test, it will give me this plot trade profile undeclared variable. That's because we need to include a bit more of Zorro's functionality. So we can press the we just simply write at the top include, and we just write profile.c, and this is just an extra library that comes with Zorro that we include in there. So we put that there, and we click test again. It's going to run through that, but this time, instead of showing us the diagram, it shows us of price. It's not showing us the diagram of price. It's going to show us this histogram, and you can see here we've got the number of times, the number of trades in grey, and the profit of those trades in blue. And you can see how the trades in general ended. Most of the trades ended, you can see these two bars here, which are just at the -50, and within that 0 to -50. So most of the trades were 0 or slightly negative, and you can see that the profitable trades, you can see the blue, the profit being quite high here, but was made by actually a really small number of trades, and that's typical of what you will see with trend trading. Is there's not that many trades, but there's nice big profit bars. So you have fewer wins with trend trading, but your wins are much bigger, whereas you can see the losses on this side. You're in a lot here, and you're actually, the reason this trade's losing is because it's getting in and getting out roughly about where it got in, and that's most of where the losses are. There's some pretty big losses in here with not that many, and then you've got this one down here in the last bucket, which would be one trade which lost 1,000. You've got another trade here which won 1,000, so they kind of even out. And you tend to, if you tighten up that stop loss, what you'll see is you'll bring this bar up to there, but you've got to be careful about overfitting data. But as you do that, you could bring your stop loss to say 400 pips, and you would cut out some of these big losses here. But it's not to say that in the future that wouldn't cut out maybe a winning trade. So you've got to be really careful about choosing your stop loss based on that. But you could set your stop loss looking at this as to, there's not that many trades here coming down here, but they do cost you a lot, obviously, because when they get down here, there's big losses. So that's something you can do. There are other plot functions in Zorro, but you can see here how your trade functions work out. We're just adding that line in the profile C at the top. So that's all we're going to do in today's lesson. In the next lesson, we're going to look at counter trend trading, and we're going to look at doing the reverse of trend trading, and how you can have a counter trend trading, which would go very nice and complementary to this one, because obviously counter trend should be running when trend trading is not. So you could potentially run those two at the same time. The last thing I want to just say to you is, you can see this strategy wasn't great, but it's a really, really good starter. So what I really encourage you to do is to take this, if you just click on LowPass, press F1, and it'll bring you all the different potential spectral filters you can use, which LowPass is. But you can also change this to some of the technical indicators. If you press the MMI and press F1, it will show you all the technical indicators that you could do. You could maybe try the Alma moving average. You could try an exponential moving average. You could try a simple moving average. You could try lots of things, and you can try different periods. But have a play around with the code. It will be available on the website. Have a play around with the code. See if you can find a faster moving average. Does that improve the results? Does shorter or longer periods on these change that as well? That's what I recommend you do for now, and have a play around with Zorro. Test different things out. It's really, really fast to run the test. The other thing you can do if you want to see is what effect does making this a daily system with 1440 being there. If we click that, runs very fast. It's significantly better, in fact, 38 pips per trade being the average, and also a 10.7% win rate. Significantly much better in terms of the profitability of it by making a longer term trading system over that same period. So they're the kinds of things. You could make this 4 hourly as well, and do the same, but I won't click that one. I'll let you test that one out. But that's all for me today. So I hope you enjoyed this video. My aim is always to be informative, honest, and importantly, free. If you like the video, be sure to hit the subscribe button and click on the bell icon next to it to be sure that you get notified when the next video is coming out. And if you do like the video, please smash the like button. It helps YouTube to know that this is a good video for traders, which in turn helps other aspiring traders find this channel and get the good content that's on here. But in any case, that's all from me. All the best, and I'll see you next time.